The insurance planning in the New Economy Marketing Playbook was designed to help you leverage this new economy into new opportunities. Here is an example of just one of the key planning concepts along with its materials that you'll find in your marketing playbook, Survivor Income Shortfall. Planning for survivor income needs and potential sources of income is a universal concern for American families at various levels of affluence. In light of the current economic environment and the income tax provisions of the American Tax Relief Act, or ATRA, all families should reevaluate the plans and life insurance coverage they have in place to provide income to surviving family members following a premature death. The majority of American households rely on two working parents today, and the need to supplement income at the loss of either parent can be substantial. This includes the cost to provide child care, but families should also take into account that the surviving spouse, now a single parent, may have to devote less time to his or her career with a corresponding temporary or permanent reduction in future earnings. The ongoing low interest rate environment produces an unprecedented low return on savings, and consequently less that can be counted on when calculating income for survivors. Coupled with market volatility and uncertainty and the future of inflation, this makes it more difficult for families to provide enough assets to meet survivor income needs. Prior insurance coverage put in place to meet survivor income needs may no longer be sufficient under current economic conditions. You will also want to consider whether any of the ATRA income tax changes may affect survivor income plans. While ATRA extended some of the Bush-era tax cuts, the new law does contain several important income tax provisions which affect various income levels. Regardless of income bracket, however, the interest rate environment and the uncertain inflation future are reason alone for a reassessment. Let's look at a hypothetical example. In 2007, Terry and Becky, age 47 and 45 respectively, with help from their insurance representative, decided that if Terry were to predecease Becky, they would like a survivor income of $50,000 per year, inflating each year for 45 years until Becky reaches age 90. To determine the appropriate insurance amount, they had to provide two key factors: 1, rate of return, and 2, inflation rate. In 2007, they felt that a 7% return was a conservative long-term investment rate, while a 3% inflation assumption for Becky's survivor income would be adequate. Based on these factors, it was determined that a $1 million policy would provide enough funds to create the survivor income stream they required. Now, 6 years later, they have a much different view of the economy, as do most Americans. They no longer feel that 7% is an achievable long-term conservative investment rate. Additionally, they fully expect that inflation will return in rates greater than their original 3% assumption. They opt for a 5% investment rate and a 4% inflation rate. They adjust their $50,000 desired income level for inflation over the last 6 years, making the goal now $56,000 per year. The insurance representative checks the adequacy of the $1 million at 5% to provide $56,000 per year, inflating at 4%. The result? The money runs out in 20 years, Becky's age 71, not the age 90 goal they desired. In order to provide the survivor income they desire, using the new interest and inflation rate factors, a total of $1.8 million of insurance is required. Terry and Becky purchase an additional $800,000 of coverage on Terry. Now is the time to re-examine survivor income needs, sources of survivor income, and potential gaps through the prism of the new economic and tax environment. Whether a survivor income shortfall is caused by increased taxes, low interest rates, inflation expectations, or a combination of the three, life insurance is often the most effective tool to help close the gap. Access your insurance planning in the New Economy Marketing Playbook today for more sales concepts and materials you can use to start conversations with new and existing clients.